Good evening, good evening. I am Janicia Jonah, the Wealth Creator. I show people how to use other people's money to pay their mortgage, create cash flow, generate generational wealth, and protect their assets, right? I have to give credit to Vice and Black Wallet posted this. So let's talk about what's going on when it comes to GameStop because some people may not know, right? So let's talk about what's going on because those Wall Street whatevers at Reddit gotta get them their credit. They did their thing, right? So let's talk about what's going on. It says GameStop, a company that sells physical copies of video games next to Auntie Anne's pretzel shops in dying malls, is the most highly traded asset in the United States, a meme stock, and currently the primary front in a micro-class war. Essentially, many normal-ish people have made a huge bet against gigantic financial institutions and are currently winning. In practice, this means we are seeing one of the largest wealth transfers from the financial ruling class to the middle and middle upper classes in recent memory. So it is understandably the only thing anyone is talking about. A bunch of Redditors and WallStreetBets analyzed GameStop stock and concluded that its price was undervalued. Over the course of months, they identified a weakness in the strategies of several giant hedge funds that had bet many millions of dollars that GameStop would fail. These Redditors purchased huge numbers of GameStop stock at low prices and then kept buying more as the prices rose, held it, and are currently forcing something known as a short squeeze. That is driving the price up and it's emptying these hedge funds in the process. Let's dive into it. Shorting is a bet that a company's stock will become less valuable. An investor sells shares of a stock at a certain high price in the belief that sometime in the near future of that stock will go down. They will then be able to buy the stock at the lower price to cover their shorts, right? Closing the deal and pocketing the difference between the price they sold at and bought at as a profit, right? So in shorting, the hedge fund is betting on the stock dropping. So if I buy at $10, but it drops to $5, I'm going to profit the spread. If I buy at 10, it's the lowest is 2, I'm going to profit the spread because my bet, that's a put if it's an option, is that this is going to drop. So they're making money betting on the fact that GameStop stock was going to drop. So this is something that giant hedge funds do all the time. Now let me stop here because I remember somebody saying Moderna and one of the other stocks attached to the pharmaceutical vaccine for COVID-19 was dropping, and this can't be about COVID can't be about money because these stocks are dropping. And I'm like, stocks go up and down all the time, but people make money whether a stock goes up or whether a stock goes down. People aren't just out here shorting stocks like the individual. You have to be wary of individuals that just know everything about everything. And I'm like, no, I legit just watched Mark Cuban the other day say that a particular stock, he was like, whether it goes up or down, where I'm positioned in the market, I'm going to make money, right? So this is something that shorting is something that giant hedge funds do all the time, often by betting against the company. Short sellers are able to put downward pressure on the stock price. What this means is that a struggling company's stock price can go down simply because a giant hedge fund invests millions or hundreds of millions of dollars shorting it. So people feel like the Wall Street bets manipulated the market by manipulated the GameStop stock by buying it and then forcing the price up. But on the flip side, these hedge funds are buying and forcing the price down so that they can profit. Same strategy. But people are like, oh, the market needs to be natural. How is that natural? WallStreetBets knew that these hedge funds put this money into GameStop and assuming that the stock would drop. So WallStreetBets said, well, if we buy, hold, and keep buying, the price of the stock is going to go up. We're going to make money. They're going to lose. Whereas the hedge funds were saying, we believe this stock is going to drop, so we're going to buy on the short, forcing it to drop, and we're going to make money. Right? Cool. So, shorting happens when they bet on the stock price to go down. I'm sorry. That's not shorting. Millions of dollars shorting it. So this happens when they bet. Short sellers can still lose. How do short sellers lose? This happens when they bet on the stock to go down, but it goes up. So that's what happened. These hedge funds have bet on the stocks to go down, but it goes up. There is theoretically no limit to how much money a short seller can lose. If a short seller shorts a stock at $20, the stock price can continue to go up, and the short seller must, at some point, buy that stock to close its position and fulfill its side of the bargain. If I short one stock at $20 and the price of that stock goes to $1 million, I still at some point have to buy that share to close the deal. In this case, I would lose $999,980. Baby, these Wall Street bets people have hedge funds by the balls. In the GameStop case, a company called Melvin Capital Management shorted millions of dollars in GameStop stock. This company, as well as a few others, made a risky bet that GameStop stock would continue to go down, allowing it to profit immensely as they usually do. But not this time. Why does this matter again? Short sellers like Melvin Capital Management, Citron Research, and others have been playing a fabulously expensive game of chicken. With GameStop stock prices going up, they've been waiting for a crash to cover their positions that has never come. The most important thing here, and a situation that happens only very rarely, is that short sellers, listen to this, y'all. Short sellers shorted more shares of GameStop than actually exist. So they're going to make in their thought process, they shorted more shares than actually existed. So they are literally making money out of thin air. Because had the price dropped, you have more shares than actually exist. So then when you make money on the spread, you're making money from something that didn't even exist. But we think the money ain't shit fair about the money game. You better learn how to play this game, play to win, and learn the cheat codes. Period. There's nothing fair. So for the people talking about, oh, the Wall Street bet shouldn't have did that. Wall Street and the market needs to, it needs to fluctuate naturally. How do you short more shares than actually exist? And you were going to make money from it. So that's literally that's making money out of thin air, right? So even if every single short seller wanted to cut their losses and close their positions, they would be unable to do so because the shares don't exist. Normally, this isn't that much of a problem because over time, they'd be able to buy enough stock to close their position due to people buying and selling stock back and forth. In this case, however, the Redditors noticed what was going on and have royally fucked short sellers. That's what it say. I'm a cusser anyway. I'm fine with cussing. What is WallStreetBets? It's a subreddit that describes itself as 4chan with a Bloomberg terminal. It's full of day traders without a ton of money who YOLO their money into a single stock to hopefully realize a giant profit in a short period of time by taking advantage of temporary price movements. The rallying cry of the entirety of the subreddit and its extraordinarily chaotic discord became buy GameStop stock, hold it, and fuck over the big hedge funds. Specifically, Melvin Capital and Citron Research, which throughout this entire saga was publishing YouTube videos about why it believed GameStop stock would go down. So let's talk about that. Melvin Capital and Citron Research were planning, they shorted GameStop stock in the hopes of making money on the downfall. Then they start pushing YouTube videos saying that the stock will go down. So what did they naturally think was going to happen? People see these YouTube videos that say the stock is going to go down. So those individuals, some are going to sell their stock before it goes down because they don't want to lose money. But the whole time the hedge fund's plan is for them to sell their stock so that the stock goes down so that the hedge funds can make money. Y'all got that? Got to be wary of news, information that comes out. Best thing I learned in college, majoring in psychology, always follow the money trail. When it's a vaccine, a study, whatever it is, always follow the money trail. Right? So this company that's looking to short shares in GameStop that don't even exist is also posting YouTube videos saying that the GameStop stock is going to go down in the hopes that people sell so that it does go down so they can make money from a short and make money from shares that don't exist, but people want to be mad at WallStreetBets, right? Cool. This created a trollish us versus them mentality. If you bought GameStop stock, you are cool and going to become rich. If you sell GameStop stock before you ride its rocket to Mars, you are a coward and are only helping these big hedge funds and fucking over your fellow Redditor. So why has the stock gone wild? Melvin Capital is in deep trouble, it says. Earlier this week, it took in $2.75 billion in funding, reportedly to help cover its GameStop shorts. Every financial publisher is talking about GameStop stock. That's a tongue twister for me, y'all. Elon Musk, who famously hates Tesla's short sellers with a burning passion, tweeted about GameStop stock and said that he's hanging out in the WallStreetBets Discord. Meanwhile, the GameStop shorts, now Elon Musk, the richest man in the world right now, right? But he hanging out with the Wall Street people. Okay, WallStreetBets people. The GameStop shorts have seemingly not figured out an elegant way out of this. Many Prognosticators and analysts on Wall Street Bets have been writing posts explaining why they believe GameStop stock will go over $1,000 or $5,000 per share, which involves a scenario where banks and investment platforms themselves require short sellers to cover their shorts all at once. This is some good stuff, which will make the stock go even crazier than it already has. They are out to make a life-changing amount of money, and they are out for hedge fund blood. What does this all mean? We are seeing the democratization of financial information, at least to some extent. It's clear that there is a sect of Wall Street bets who have worked in the financial sector and are fed up with increasing inequality, are tired of watching giant corporations repeatedly fuck over ordinary people, and are explaining how it works to huge groups of people. We have been told for decades that the banks and the people who work at hedge funds are smarter than us, that they should be the ones who pull the levers on the economy. All along the way, they have gotten fabulously wealthy, and we have been stuck with stagnant wages, record consumer debt, and financial advice that tells us to wait until we are old to retire. Wall Street Bets says this is a new paradigm where the masses have the power and hedge funds are scared. We are not witnessing the death of the financial class, but for the normal people invested in GameStop, making a few $1,000s at the expense of Wall Street fat cats is a good prize. That I was so glad that somebody broke it down, because I was hearing about GameStop, I'm hearing about these hedge funds, and then I have a snippet of a news segment. I'm going to chop and screw this video up, add that in before I put it on before I put it on YouTube. But the woman was like, that's not a retirement plan. Most people don't have a retirement. People are pissed. And this is just one stock, right? But I want people to think about the fact that these hedge funds, specifically Melvin Capital and this Centron Research company and others, they felt like GameStop stock was going to drop. So they did a shorts. They went and invested in the shorts to make money for the shorts. And then they turned around and pushed out YouTube videos saying GameStop stock is going to go down, which the only logical reason why they started to put that propaganda out there is to fulfill what they were trying to do. If you hear, oh, this stock is about to drop, you should sell your GameStop, and everybody started selling based on the videos of these people that are trying to make money off the shorts, and now the stock goes down, and they're like, see, we told y'all the stock was going to go down. Whole time they've walked away with billions of dollars. What do I want you to take from this? Money is a money game that's being played. We are not going to win going to work from 9 to 5, saving, investing a little bit here and there. We're not going to win the game at certain levels. It's so many levels to this. And understand from this example, few, if anybody, at the top wants to see the little people win. They're going to throw us little trinkets here and there. Oh, pull yourself up by your bootstraps. Oh, y'all should be investing. But when they tell you you should be investing, they really want you to put your money in a 401k. Nothing wrong with these places. But they want you to put your money in a 401k. They want you to put your money in the IRA, a 457, a 529. Those plans, Google. Here's your assignment, Google. What is the average amount in a 401k at retirement age, right? And if you want to retire at 65, 70, ask yourself, are you going to be able to retire off of that $195,000 that's in your 401k? If it's that much, that is going to be taxed every time you pull money out of it, so you don't get that whole amount. is that enough to retire off of? But this is what we're being told, and a lot of us are trying to figure out why we aren't winning at the money game, because they giving us the poor man's advice. They not taking that advice. The CEO of your company, if you work for a major corporation, more than likely is not getting earned income. They want stock options. They want stock options because they want portfolio income. They want portfolio income because portfolio income is taxed less than earned income. So they will say, give me stock options in lieu of a salary because they know the money game. That's what your CEO is doing. That's what your CFO is doing. That's what executives are doing. But then they're telling you, work, put your money in this 401k, save for retirement. Some of them don't even have those accounts. Unless it's like a company match. Now, if your company is matching, take the free money. If you are overfunding your 401k and some of these other accounts, there are better places more than likely for you to put your money. Especially when you talk about taxes and beating out Uncle Sam. Right? So the Wall Street Bets group, I'm glad that Vice posted this. That was not me. I got this from Black Wallet on Instagram. They posted from Vice. Wall Street Bets, I mean, but we're talking about billions of dollars. Now, one person is going to get those billions. It's multiple people, and some people got in and bought GameStop stock. So, Robinhood. Robinhood stops the sale of GameStop on their platform, and some other platforms did as well. Couple of things. I posted something today. Robinhood didn't have the money. It says, don't know if this is true, but the article says they had to go and get $1 billion to continue to let people trade GameStop. Other thing I was told, 40% of Robinhood is owned by the hedge fund that was looking to short GameStop, right? But yes, I will still trade on Robinhood because Robinhood, TD Ameritrade, any other ones, when it comes to equity, financially, racially, or anything like that, I'm a pessimist or a realist, whatever you want to call it, right? So this is what's going on. This is why people are talking about GameStop. This is why, people are talking about hedge funds. Nothing that Wall Street Bets did was illegal. If Wall Street Bets did something illegal, then on the flip side, in my mind, the hedge funds had to do something illegal as well because they were planning to short and then pushing out propaganda talking about the stock was going to drop. Yeah, they feel like the stock going to drop. They want the stock to drop. They've invested millions trying to short it. But Wall Street Bets, so what they are doing, they're probably looking at, okay, what plays, are these hedge funds making? And then they're saying, we're going to all get together. There are power in numbers. So if you are African American watching this, Wall Street Bets just proved there is power in numbers when people collectively come together. They didn't get out and march. They didn't go and do no damn protest. They didn't decide they gonna go have a sit-in in Wall Street. They said we coming for their pockets. We gonna hit them with their money. Black folks be like, oh, let's get together. Not all. We gonna go march on Washington and have a city, and it's just not fair what Wall Street is doing. Wall Street Bets was like, oh yeah, we about to buy this GameStop stock, and we gonna hold on to this GameStop stock, and we gonna keep buying it, and we gonna spread the word and tell other people to buy it, because we gonna tell them to keep going up, going up, going up, and we about to take some billions from this hedge fund in 2021, because they gotta pay up. They gotta pay up. We gonna drive this stock up to where it's gonna force them to pay up. And we want our money, and we want our money on time. That's some pimp shit right there. They just exercise they pimp hand. Yes. Hi, Naisha. Absolutely. We don't want equality. We want equity. But they didn't say, oh, we found this out. I'm going to go, tell on them, and we're going to go and we're going to demand that they, that's the game you playing? You playing that side, I'm gonna play this side. Little bank about to take big bank. This is interesting to see. So we're gonna see how it all plays out. But it's a beautiful thing. The money game. Money. Money talks, bullshit walks, ain't shit changed. Money make the world go round. Money, gold, diamonds, silver. Right, so that's it. That's all. It's Friday night, y'all. Have a good one. I'm going to go relax, shop, and screw this video up for my YouTube channel. Thank you for liking, loving the video, share the video. Have an awesome, awesome day.
Now to this headline getting a lot of attention on Wall Street. Day traders at home in this pandemic on inexpensive apps, taking on giant Wall Street hedge funds who have bet against struggling companies. Many of those investors at home investing in those struggling companies, forcing the hedge funds to then pay up for shorting the companies. Here's ABC's chief business correspondent Rebecca Jarvis tonight.
Tonight, the New York Attorney General is investigating after a multi-billion-dollar bubble on Wall Street burst. It all started as a raging tug of war between a group of young stock enthusiasts who bought shares in struggling companies like GameStop. But the biggest hedge funds in the country were betting GameStop would crash, also known as shorting. By buying the stock, the newcomers helping to push shares of GameStop up 1,700%, costing the hedge funds more than $5 billion. But today, several online brokerages decided to restrict trading in companies like GameStop, effectively shutting out the little guys. But tonight, many say they're not giving up.
I think the stock is going to go up a lot still, regardless of the new restrictions.
You did not sell today?
Nope, not a single share.
19-year-old JP Hurtado is one of many newcomers stuck at home in the pandemic, swapping trading tips on Reddit. Until today, he was using the free online platform Robinhood to buy and sell stocks. That is, until they told their users they couldn't buy any more GameStop in light of recent volatility.
What did you think of Robinhood's move?
I thought it was pretty unfair and unjust.
And now, late tonight, an about face. Robinhood announcing it will reopen limited trading tomorrow, calling it a risk management decision.
So let's get right to Rebecca tonight. And Rebecca, as you reported, New York's Attorney General tonight saying she's reviewing concerns about trading on the Robinhood app. We know those at-home investors say they deserve that right to do it. But you're learning tonight that several members of Congress are now looking into this as well.
That's right, David. We've heard many calls from Congress to look into this new territory, these new trading devices. It's important to keep in mind here, the SEC says they are not commenting to ABC News at this time, but the bottom line, this is not saving for retirement. If you are even considering doing this kind of trading, proceed with caution, David.